Wall Street feeling the heat today. The Dow Jones dropped more than 1,000 points. Let's take a look at the big board right now. Look, that's 1,300 points off. More tellingly, what does that mean? It means 4%. That's a giant amount of wealth just shedded. And for people who've got pensions, 401ks, and any kind of stock, that's bad news. So for more, let's bring in ABC News financial contributor, Alexis Christoforous. So, Alexis, what do you make of today's plunge?
You know, Terry, this time yesterday, we were talking about the Dow being up more than 900 points, but investors had a chance to sleep on it, and they're trying to figure out what the Fed's aggressive moves to curb inflation will mean for the overall economy. And the reality is starting to set in that this is going to be a challenging environment for the stock market. So yesterday, we saw the Fed raise interest rates by 0.5%, the most aggressive rate hike we've seen in 22 years. They indicated more are to come. So now investors are worried that all of these rate hikes will dip the economy into a recession. Also today, we found out that consumers might not be propping up this economy for much longer. Etsy, eBay, Wayfair, and Shopify all reported disappointing earnings as people start to pull back their online spending. So I think what you're seeing today is investors trying to price in a recession. And for many, it's not if, but when will it happen and how severe will it be?
So are there any bright spots here for either people who are investing or people who are, looking for work or looking to make next month's rent?
Well, I can tell you there's one bright spot in the way of Twitter. That stock is actually up today. Elon Musk making a little bit of money here because he was able to tap some of his deep-pocketed friends, and they're going to kick in some money for his buyout of Twitter. Larry Ellison, the former CEO of Oracle, even the former CEO of Twitter, Jack Dorsey, are going to throw in a little money on that deal, Terry.
So Twitter's doing all right. I don't know what that says about the economy or about the country. You kind of, his automobile industry, is the steel industry, but Twitter's going to be okay. I guess that's the story there for Times. So as the Federal Reserve is raising interest rates really sharply, I'm in the market for a house, so I can see that happening. What does it mean for all of us, those of us in the market for a house and others, even if they aren't investing in the stock market? What's the relationship there?
Right. Well, the relationship is pretty stark here because you're going to see interest rates rise immediately on things like auto loans, home equity loans, credit cards. All those rates are going up. Also, rates on CDs and savings accounts moving higher as well. So I guess that's a good thing here. But I've got bad news for you, Terry. I know you're in the housing market right now looking for a house, but those mortgage rates, boy, oh boy, they hit a 13-year high today. The average rate on a 30-year is now 5.27%. This time last year, it was 2.96%. That's going to make everybody's monthly bills, mortgage payments even higher. And I think it's going to push, the idea of buying a home even further out for a lot of Americans.
You really know how to hurt a guy, don't you, Alexis? No, I understand that. And, they're just sometimes you got to buy a house. At any rate, what does this tell us about where the economy is headed? Is there foreshadowing here? How concerned should people be?
Well, you don't want to see this become a self-fulfilling prophecy. Certainly, Wall Street is preoccupied with high inflation and a possible recession. But I think we just got to sit tight because these market swings, all this volatility could be the new normal for a bit until the Fed starts to get inflation under control. A general rule of thumb, if you're in the market for at least 3 years, these big down days can be tremendous buying opportunities. If you need your money sooner than that, you might want to think about reducing your exposure to the stock market. Maybe moving some money into bonds or those dividend-paying stocks, which are traditionally a safer bet, Terry.
Well, that's good advice, Alexis, as always. Thanks for being with us.
Thanks.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.